everybody. Happy Friday. Man, what a trading week out there. What a final wrap-up day as well. Hope you all did well. Andrew, good to have you with us. It's finally weekend. Again, happy Friday. And since it is Friday, what we're going with, this is the Blinking Owl Distillery. I believe this is the 2-year wheat bourbon. Good stuff. Anyway, if you're not drinking today, that's fine. Not to support anybody's drinking habit. But it's Friday, so I'm going to have a nice frosty cold cocktail. Hope you're all doing well out there. Josh, you're in Key West? For some reason, I thought you were in Minnesota. Good Josh with us. Got Les Gold. We got Katut as well. Tomasina, hope that foot's doing better. Tom Barr, Chef E, and Andrew. Awesome. We usually have a smaller group on Fridays as well, but that's okay. We'll make the most of it today. So I may just have to drink a little bit more because I missed that trade we talked about in yesterday's show. A little bit bummed about that. So let me start things off by going into what happened this week. We'll look at the numbers, and I'm going to go to a whole bunch of listener questions. I have plenty of them. If you have a specific question, you guys know what to do. Go ahead and type it into chat, and I'll hopefully get to as many of those as I could get, as many of I can get to on today's show before I pass out from drinking too much whiskey. All right, so this is where we at here. Let's go. I tried to draw a little bit of a fun graphic here, as I usually do. Reason for this one is just everything rocking again, all-time highs. If you saw today what happened with Facebook, I mean, that's really setting the stage up for, I think, a wild ride next week. At the end of the show today, we'll talk about specifically what's happening next week, which is, I was excited about this week. Next week is just the one that I'm really excited about. You have 45% of the entire NASDAQ weightings reporting next week with just 6 companies, so it should be a lot of fun. So we'll look at the numbers here, and they're all out of order. But what's noteworthy for this week was how positive everything was. S&P for the week was up 3.13%. Out of the 11 market segments that we look at, kind of comparing, only one of those was negative, and that was utilities, down 1.19%. Everything else up. That's impressive. You don't normally see that kind of bullish trajectory. A lot of things were coming down into demand. We identified that and talked about that on the show. So for those of you who went long on these, great. There certainly was a lot of opportunity out there. Now, there are a few market segments that I have had particular interest in, one of those being energy. If we look at, let me bring up XLE for you guys. You look at what's happened with energy over the past 3 days. It had a nice bounce off that demand zone, but it really, I feel like the momentum kind of fizzled out. You can see we've had 2 down days here on that XLE ETF, but it's the bigger picture. It's kind of that breaking point. If we get a close down below those lows that we hit earlier this week, right around, call it 46.25. If we get a close below 46, my optimism is going to start to change quickly here on XLE, and we might see more downside movement. So really hoping that XLE holds, even though you had a great 3.4, almost 3.5% up week, it still feels weak overall simply because of the trajectory and the inability to bounce and make some new highs. But maybe we just need to give it more time. The other one was XLF. And the reason I'm interested in this one is because you had such blowout earnings from all of the financial firms. You would think that this thing would be doing much better than it is. It's really just been sideways for a month now, almost totally flat. This is uncharacteristic of financials. And again, they all had fantastic, fantastic earnings. They were all blowouts. That said, I guess you guys like when I do the donkey of the day, so I'm going to start off with a donkey of the day, a little Neha in the background there. But the donkey of the day this week, or at least today, goes out to a pretty big financial firm. It's actually JP Morgan. You might remember years ago, JP Morgan, especially Jamie Dimon, saying that he would fire anybody at JP Morgan who was trading in Bitcoin. And conveniently enough, the day he made that statement, I actually have transaction records from JP Morgan buying Bitcoin products on the Swedish Stock Exchange. So, talk about hypocrites, do what I say, not as I do. Today, JP Morgan made an announcement that they are now offering 5 products to their customers in the crypto space, 4 of which are those Grayscale investments. We talked about Grayscale. I think Brennan was waving the flag about Grayscale a while ago, and they've announced a whole bunch of new products. So now JP Morgan's clients can trade the Bitcoin Ethereum Trust, the Ethereum Classic Trust, the Bitcoin Cash Trust, and Bitcoin Trust. So those are 4, and there's also an Osprey Funds Bitcoin Trust. So I'm surprised they chose Bitcoin Cash for this, which maybe should make them the double donkey of the day, knowing what's backing Bitcoin Cash. But it's good news for the crypto space to see JP Morgan, one of the biggest retailers out there, opening their doors to crypto. But it's, for me, it's kind of like a big FU to them as well, because you talk trash about something so much. I mean, what's next? I'm going to see Charlie Munger and Warren Buffett come out and say they're buying Bitcoin as well after they called it harvesting fresh baby brains. I don't know, kind of annoying out there that type of stuff goes on. It's just the donkey of the day for sure. JP Morgan, maybe the donkey of the week, maybe even the year, to now all of a sudden flip around and everything's going great. Okay, so let's see. What did you say there, Tom? Trading week? Get Bob Dunn on. There were some good hockey trades this week. Yeah, I always love having Bob on. It's just sometimes he's hard to get a hold of. He's like the absent-minded professor, man. He's out there sometimes. Okay, so again, if you have questions, type them on in. I just wanted to quickly start off with the overall markets, then get into that donkey of the day, which I thought was long overdue. I've called him a donkey before for making the comments when he made it that day and actually showed JP Morgan buying Bitcoin. Now I'm going to go to listener questions that were sent in the last 24 hours, and there were some good ones, so I'm glad you guys sent them in. Michelle, let me take a sip of whiskey before I start looking at coffee futures. All right, so Michelle says, I'm looking for your opinion on the trade I put on for KCZ21. Filled at 192.50 with a target of 225. I have moved my stop loss to break even. So let me bring that bad boy up for anybody out there. Now, I don't usually trade coffee. I have a while ago, but it's really nothing that I focus on with regularity, but I can certainly analyze it. Now, the way that coffee has moved recently, all right, for everybody who sees this chart, and I know most of you here right now are regulars in the program, so you know what I'm gonna say to this is you had a pretty substantial breakout above these highs, call it 167 on coffee futures, right? It ripped above it earlier this week and had an extremely aggressive move on very high volume. If you're long at that point on the breakout, and let me draw a line here so that anybody who wants to see can check it out. If you're long on this breakout, great. Right, that's the point to be long on this trade. But if you're jumping on it now, you've already bought it after it's moved so much. And for those that don't trade coffee, my memory, it's been a while. I think, if I remember correctly, it's like $375 a point. Today's move on this looks to be, let's see, how much did it move today? Its high was 212.40. Its low today was 190. So you're looking at 22 points times 375. I think you're looking at about $8,000 on one contract. So, your margin maintenance for coffee, I believe, is about $7,000 or $8,000 also. So that means that this could have been a 100% rate of return trade today had you held from peak to trough. Now, the reason I bring this up is it moves a lot, and normally it moves a lot. But over the past week, it's moved an incredible amount. So I think by jumping on this, either long or short, you're taking on a significant amount of risk. So, Michelle, be very careful with this one. As just as quickly as this thing moved up, it could come ripping down. And for those of you who know me, I believe the markets are what? Yeah, I believe they're rigged. I believe it's manipulated. I believe that this is, moves up like this are done on purpose to bring in investors because they go, man, I got to get on coffee, or I got to get on this asset or this commodity or this whatever currency. When you see those parabolic moves, it gets a lot more attention in the media. And unfortunately, that's what brings a lot of people into those trades. And then they're left holding the bag as it goes right back to where it was. So make sure you keep that stop loss in place there, Michelle. You said you got filled at 192.50, so I'm not quite sure what you meant here because you said you moved your stop loss up to break even. So let me put the line at 192.50. All right, so I said 192.50. That's the upper black line you see. So if you're still in it, you're down a little bit right now, right? You're down, about 50 cents, just over 50 cents. I personally think that this is going to continue down here just because the way that big impulse move happened on extremely high volume, and we had climactic volume yesterday and today. So I'm really not optimistic on it. I apologize if that's not what you want to hear, but anytime you see something like a commodity, gold, silver, wheat, soybeans, go parabolic like this, you always got to have that in the back of your head of, am I chasing this? Am I running after this thing maybe a bit overly aggressive? Now, this is contract specific, so you can see, of course, volume is going to be spiking up here. But all in all, this is the December contract. You got plenty of time to expiration. I'm just a little bit nervous on coffee, feeling that it will probably come back down given this most recent pump. Could it keep going? Sure. Let's just go at, KC. And we'll look up the continuous chart here. Go to a monthly. All right, so we certainly have some upside potential here. It could keep on running. Absolutely could keep running. I just get nervous jumping on something after it's had a really sharp, aggressive move. It makes me nervous just because I know that there is this pressure by markets, institutions to play this game on retail traders, which is sharp spike upwards, suck in the retail traders, and then rip it back down. So, you know, if you take out the fact that this is coffee and look at this price chart on the monthly, I do like it. Right? I like it simply because we based for 2 years. We went sideways for 2 years on coffee, and now all of a sudden you're breaking out. Now, does that mean we're going to get to those 2010 highs at around 450? I doubt it. You know, Starbucks would probably not want that to happen either, given how expensive their coffee would be and cutting their profit margins. But just from a pure technical perspective, I like the long-term picture because that downtrend and sideways consolidation have now broken, and now you're seeing some move to the upside. So, I like it on the big picture. On the daily, it makes me a little bit nervous because of how quickly it moved. Certainly, it's on a beautiful uptrend right now, but I think it moved a bit too much, too far, too fast in a 1 week period of time. All right, you guys are quiet out there. Anybody have any great trades this week you want to talk about? Want me to bring up something? If you got something that you want to share, bring it on. I'd love to talk about your trades. I know Fridays are always so boring for the show. I try to drink and make you guys entertained. So, let's see, Kevin. Kevin says, I got stopped out of my Facebook short today. Is it still a good short or still a good short? Well, that's a tough one. You know, Facebook today, they're coming out with earnings. If my memory is correct, I believe Wednesday is when Facebook reports earnings. The danger you have here, Kevin, is here's your price chart of Facebook. It broke out to all-time highs, and it didn't just break out, it ripped out. And the reason that you saw this happen, at least one of the main reasons is, one of the main competitors that's generating revenue from ad space online reported earnings today, and that was Snapchat. So Snapchat, while it's not I would say a direct competitor, it's in the same vicinity space as Facebook. Facebook obviously is the juggernaut. Snapchat is not the juggernaut. However, the ad revenue from Snapchat was off the charts. Look at the price of Snapchat, the SNAP. Because of COVID, I believe, advertisers are really going to online advertising. And you can see the huge price jump today. It was up 24% on Snapchat today. I still think Snapchat's garbage, but you know, I'm not putting my money on that one. I'm not shorting that one anytime soon either. Huge volume today. Average volume is 17 million. It traded 116 million shares today, so almost 10x on its volume. That type of optimism with regards to ad revenue for Snapchat filtered into Facebook. And Facebook certainly have benefited from Snapchat's successes. Now, this may be a case, I don't know how you want to approach this one. This could be a case of that buy the rumor, sell the news. For example, you know, Snapchat came out with their earnings, big pop. Facebook's up 5.3% today. We still have the weekend, Monday, Tuesday, and then aftermarket on Wednesday they report. You know, do we get some follow through and then all of a sudden Facebook doesn't meet those numbers and has a sell-off? I don't know. That's a risky one that I'm not quite sure if you want to jump on that Facebook bandwagon, but that's why it rallied up. Now, the question that you asked, Kevin, is it still a good short? No, I don't think that it is at this point, right? There's nothing there that says, hey, here's a great supply level. If you want to short this, you're pretty much going off of opinion. Happy Friday, Chris. Good to have you with us. Chris, since you're newer, you probably don't know the tradition on the show. I don't drink during the week, well, unless I go to trivia, but Fridays is usually a whiskey kind of day. I had a couple really great trades this week, a couple that I missed, which I was a little bit bummed about, and a couple small losers. So all in all, a great weekend. So cheers to you, Chris. Hope you have a fantastic weekend as well. All right, so I don't think Facebook's a short right now, even though I don't like Facebook. I kind of think it's an evil entity right now because of just how their algorithms work and how I believe that they can change people's perspectives with incorrect information and almost radicalize people based off of what they see on their timeline. I'm not a fan. You know, when I saw the social dilemma, I really found that one interesting from Facebook's perspective, and I'm trying to use. Only reason I use Facebook is to promote this show, and judging by how many people, new subscribers I have, it's not working. So anyway, no short on this one, Kevin. If you look at the price chart, I'll go to a monthly here so you can see the big picture. There's nothing here from a supply perspective. So if you're going to go short one of the strongest stocks in the last few years, especially over the last 2 years, you better have some reason for it. I don't see any real reason for shorting Facebook here, especially look at the daily. It's all-time high breakout. Keeps on going. So that's, no short there for me. I would wait until after Wednesday, after the earnings announcement, to maybe make some decisions on whether you want to go long or short. But then you might be chasing something based off what the earnings announcement is. So I would leave Facebook alone, as I would many others here. Okay. Next question. Richard, I'll just do IBM now before I forget, because I tend to forget. Richard says, IBM, do you like IBM for a starter long trade? All right, let's see. So if I'm going to look at the swing trade that you're talking about, I want to start big picture. So here's your monthly of IBM. I'm not a fan of IBM. For 9 years, it's just been a slow grind down. I mean, I'll put my cursor where it's 9 years ago. Here's the peak in 2013, so call it 8 years. It peaked out at about $215, fell all the way down to a low of 90, currently trading at 141. But look at the highs over the last 8 years. Lower high, lower high, lower high, lower high, lower high, and lower low, lower low, low. This is the definition of a downtrend. So, this is the challenge is you have to put aside your emotional feelings about, hey, I like this stock, I like this company sometimes, and just look at the price chart. Granted, the move we've seen over the last 6 months has been good, but, we turned around this week at a supply zone, starting to sell off a little bit. Now let's go look at the weekly and see what we can glean there. All right. I mean, this is perfect. We came right up into the supply zone. I mean, this is supply and demand at its finest. Came right up into the supply zone from back on the 14th of February of 2020 on the weekly, and have been falling just about ever since. So not bullish on this chart either. Look back at that daily. You almost have a head and shoulders pattern. It feels like it's rolling over. So while I might like IBM, they're one of the bellwethers and blue chips of the financial markets, it just doesn't look that good right now on a long-term, going long basis. I think that there's other investments out there that give you a clearer picture of trend, a clearer picture of how things are moving. This one has been surprisingly weak. If you line it up next to the market, kind of put them one on top of each other, IBM's a lot weaker than our equity markets have been for the past 8 years. So whatever the case may be, something to me is fundamentally wrong with IBM, and therefore I probably would stay out of it. Just based off the charts alone, not the fundamentals. IBM acquired a company that made them more profitable this last year, sure, and they're also going to be doing a split this year. So, that's another piece which, people are looking at. They're supposed to do a split by the end of the year. Not a split. They're going to do a spin-off, which is different than a split. They're going to split into two separate companies. I forget the Kensys or Gensys or something as the second split, which I believe was going to be like 20% of the valuation, and IBM would maintain 80%. So there is a split coming, and normally when you talk about those spin-off coming, normally when you talk about spin-offs, people flock to it and buy it because they want to get a hold of the spin-off. And what's interesting is I'm not seeing that. Yes, you've seen from February or March of this year, went from 119 to a little over 150, but so did everything else, right? The entire market surged. What makes me a little nervous is what's happened since June, right? Markets, all-time highs. So let me see if I can do a little bit of sneaky work here. Not sneaky work, it's the wrong term. Let me hide this chart at the bottom here. I will disable volume, and I'm going to copy this window and put it up top as well. Copy window, paste window, and then what I'll do is I'll put the SPY on top so you get a sense as to, actually let's do NASDAQ. I think it's probably more related to the NASDAQ. So let's put the triple Qs on the top. Okay, do you see these pictures? This is the exact same time frame. They're perfectly lined up. Something fundamentally changed with IBM in June. And maybe that was the acquisition. I'm not familiar with that acquisition that they may have made there, Richard, but I think you can look at this and say, well, if IBM is in fact strong and running like the market, which is really strong, it should be making all-time highs right now, and it's not. Now, it doesn't mean it's dead. It just means that for whatever reason, and I don't have the brain capacity to figure out exactly what it is. I don't really want to waste that time either. It's just not beating the market. And I know there's a mindset, Richard, right? And this may be what you're thinking is, well, IBM's a great company, and it's down off its all-time highs while everything else is making all-time highs. Therefore, IBM should have a real big rally and rip to all-time highs and join the rest of the pack, which is a logical thought process. I like to look at it the other way personally, which is if it was meant to be with the pack, it would be with the pack, if not leading the pack. So That to me is the way I would look at it. So was that an earnings announcement? Yeah, I don't have the earnings block on this one, but that's how I'd analyze it. And I don't want to sound overly pessimistic on it. I still think IBM's a great company, but do I want to buy it right now as a swing trade? I mean, look at the chart. Chart tells me meh. I'm meh. Just not the best out there. So. All right, so there you go, Richard. Got your question in. Exactly. Richard says just overextension would be the only reason to short Facebook. Yeah, 100%. 100%. That's the only reason. And you know how dangerous that is, right? Because there's people out there right now that are going to look at this Facebook chart and go, oh, man, it's overbought. It's a huge spike up today. And then they'll go and add on volume at the bottom of the chart like this and go, man, climactic volume. It's over double normal. I'm going to short this thing because it's going to come down. And then they really want to support their decision. And they go out in something like, oh, let's add in Bollinger Bands. They go, oh, man, look at it. It's outside its upper Bollinger Band. You got to be kidding me. And then they look at it and they go, you know what? Let me really be sure. I want to add on things like stochastics. You go, oh my God, it's up at 71. It's so close to overbought. I got to short the hell out of Facebook. This is where emotions get in and you get smoked. To me, very dangerous situation to be in. Wow, Chef E, you're dropping the big bucks today, man. Thank you so much for the contribution, man. I feel like I owe you something now, Chef. What'd you like, Chef? I'm happy to help. I'll steer the show around what you want today. That's a great donation. Love it. Thank you so much. I appreciate that. Cheers to you on this Friday. I hope you have a fantastic weekend out there. Thanks for your support over the years as well. Andrew D says, Merlin, what do you think about psychedelic companies? I'm a fan. I believe that the evidence is overwhelming that used properly under the right conditions and guidance, psychedelics can really help people overcome a lot of issues. There's wide ranges of psychedelics here. I think that what happens, unfortunately, is there are a lot of people who abuse psychedelics and they end up on the mainstream media, as nightmare stories. It's kind of like the movie Reefer Madness, right? If you watch the movie Reefer Madness, I mean, this guy's killing people with axes, and I mean, it's like this shit doesn't happen. Every time I get stoned, I want to sit on the couch and watch TV and eat a bag of chips. I'm not going after anybody with an axe. I'm like, oh, you got an axe? Cool. Well, come on in and sit down and watch some TV with me. It's misconceptions about what these drugs really do, and for me, psychedelics, I do believe that under the right medical guidance, if you have someone who understands how to control or work with someone when they're in this psychedelic state, huge benefits. Huge. I think a lot of depression can be fixed, psychological issues can be fixed, or at least identified, exposed, and worked on under psychedelics. So I am a fan. I don't know, Andrew, about the companies themselves. So I don't know, how those companies are functioning or operating, but as a whole, I do support the use of psychedelics for treatment of people. Recreation, that's a whole different ballgame. No problem, Richard. Well, welcome to the program again. Hit that subscribe button. We do the show every day, Monday through Friday. Well, just about every day, Monday through Friday at 2 p.m. Pacific time. Merlin, what do you think about psychedelics? That one, Intel long or rigged? Great question. INTC. Whole Intel. Intel was the king. Intel ruled everything, right? They were the most dominant player out there. Now you look at Intel, and I'll put Intel at the bottom, and I'm going to put SMH on the top. Now, SMH is an ETF, or it's an ETF that tracks semiconductors, chips, if you will. You'll notice that these are. Let me make sure I have the right time frame. They're actually misaligned, so let me line them up here so they're the exact same time frame. Boom, boom. One more. Okay, these are right now the exact same chart. They're showing you the exact same data. And for whatever reason, April of 2020, Intel just said, you know what, we don't want to play the game with anybody else. We're done, right? So all of a sudden you saw a huge separation. Semiconductors, while they've lost the momentum, the head of steam is not there. It's still moving up, just nowhere near the trajectory it was back in 2020. But Intel said, nah, you know what, we're done. We've jumped from over $67 down to 53. For me, you just broke down below a very key level on Intel, right? It's been a line in the sand. We've had this line drawn for a while at 53.50. Well, you're now at $53. After this is broken, and you got to close below this low. That to me is the point where you say, you know what? Now you're looking to add to your short position, or if you are long, get out of those long positions. And I agree with Big Eb. AMD used to be the laughing stock. You go back a decade and talk about AMD, people are like, AMD, AM dumb. I mean, they're garbage. Now they're the lead dog, and it's funny how things change. It's kind of like looking at digital photography and saying how Kodak was the first there. They dominated the market, but they thought it wasn't going to go anywhere, and all of a sudden, Kodak? Who's Kodak? They just didn't stay with the game. So the question is Intel going to follow that same suit? Now, granted, they still make some great products. I mean, Intel does good stuff, but AMD and others have really just run circles around them, and that's reflected in the price chart. So to go to your question, Daniel, long or rigged, I would not be going long here. I'd be more inclined to go short because a couple conditions have been met. We're making lower lows, lower highs, and we just closed below a pretty significant demand zone at 53.50. So I like it as a short. The question is, how far is it going to go? You know, you have some fairly weak demand zones on this stuff. There's one at 51.30. There's another fairly weak demand zone at, we'll call it 49. The one that I really like is going to be all the way down to right around $46 or 47. So, you know, definitely some downside potential here for Intel if things start to roll over, but it just looks weak. You know, to me, it looks broken. It's not following what the market is doing. So, there we go. Let's see. Mushroom tea. Chris says mushroom tea. Yes. Be careful with mushroom tea. Just be careful with psychedelics, right? Oh, and legalization. Ooh. You know what? Let's. My worry with this is I've seen it happen with friends of mine where, you know, you get involved with let's say cannabis, and then, you know, you're introduced to some guy who sells you cannabis, and next thing you know, it's like the gateway, and all of a sudden you're into some really bad stuff. So I'm not so big on legalization of psychedelics yet. I think the potential for people to mistreat those recreationally is very high. And I don't think that's going to be good. I'm definitely a huge fan of legalization of cannabis. I think that's just stupidity. We haven't done it yet. Let's tax it. Let's legalize it, and, you know, get past that one, and then see about legalizing some other ones. I think that was Kojak Big Ed. That was the big cop. All right, Michael says Boston beer. You're talking Sam, right? It's that ticker symbol SAM. Yeah. So here's Boston beer. Let's see what he say. Boston beer is the demand zone at 674 to 646 looking like a good zone, or do you see a better zone lower? So I'll put 2 lines on here real quick, and then we'll map out that zone for you. And I'll put those numbers exactly on that screen. What do we want? You wanted 674. There's that one. Oh yeah. Yes, that's a great zone. I like that zone. I do. Again, the only challenge here is you're catching a falling knife. I mean, this is the definition of catching a falling knife. And not only is it falling, it's plummeting to earth like a comet. So while I like that zone, you think, Mike, you got to be careful because, again, you're going against the trend, right? In this situation, you look at this price chart, I would rather be shorting the downtrend than trying to pick a bottom in a downtrend. The probability is just much higher for me to short during the downtrend, right? If this were to come back up to a supply zone, that's a better, higher probability trade. Go with the trend. In this case, you're talking about picking the bottom. And I think that's the dangerous part of this trade is you're trying to pick that dead low. I'm okay with it. I like your zone. I mean, you've got a fairly wide zone there, right? It's almost 30 points. It's a 28-point zone. That's okay, but you just got to make sure that if it does break 646, that you take your stop loss, you know, lick your wounds there and move on. Don't have a revenge trade. Don't get angry about it. You just got to know you are catching that falling knife here, and it's a dangerous situation to be in a security that is trending down already. It's one thing if, imagine that the picture was the opposite here, and I had Boston beer in a big uptrend, and it had a huge gap down into demand. My talk track would change significantly because I'd be looking at it going, great, trend is strong, pulls back into a demand zone, I'm okay buying that. The risk to me is just a little bit higher on this Sam or Boston beer trade because it's been trending down for 3 months now, aggressively. Kenny says, by their own admission, Boston beer said that they're in trouble. Yeah, I don't know. I didn't read any headlines on that, but, you know, clearly something is amiss here because this is the roaring 21s, man. People are out partying and drinking. Let's do it. I mean, I'm going to a beer fest all day tomorrow. I'm drinking some beer. Won't be any Sam Adams there, but I'll be drinking. All right. Let's see. Tom says, what's your favorite planned stocks that should be coming back down to earth over the next year? I'm thinking Tesla, Snapchat, and the lockdown winners like Zoom, Netflix, Leaps, put spreads. Great question. Let's see. I'll run those through here. And I guess TSLA. I guess the question I have for you, Tom, is what's your favorite play on stocks that should be coming back down? Generally, it's going to be buying puts because I know I have defined risk there. I don't have to worry about stop losses. If I buy puts on Tesla, which at this point I wouldn't be buying puts on Tesla. The only time I would is if we get a close below those levels right there. Let me take away some lines for you guys. And the reason for that is this. You're back on an uptrend, right? It bottomed out in mid-May. We have higher lows, higher highs. It feels like it's just consolidating. Oh, don't make me bust out the yellow box, everybody. There's the yellow box. I'll draw it appropriately, and I'm just going to leave this one on here because until Tesla gets out of this yellow range, I don't care what it does. I could care less, right? No big deal. So that one doesn't do it for me, but I personally, and again, this is not a saying do it my way, but I like to just buy puts outright and I go out 90 days or more because, again, I know I'm paying X amount of dollars for that put. If it expires worthless, I know I am my max loss at all times. If you were to go short Tesla here and all of a sudden it kept on ripping up, you have theoretically infinite loss. So Tesla, nah. Snapchat, boy. I got caught shorting this one a while back on this earnings, a couple years ago. Was it a couple years ago? I think I might be able to show it to you. Where was that one? I think it was actually back here. I actually shorted this last earnings announcement. I don't believe it was the next day. I think I shorted like the day after. And I took some losses on that. Oh, no, this isn't Snapchat. S-N-A-P. This is S-N-P. There you go. Got it mapped out. So last time I shorted Snapchat was back here in 2020, October 22nd. Because I remember it was the second day after the earnings announcement I shorted. And it's just done nothing but go up ever since. So, does Snapchat come down? Yeah, I believe so, but right now it's just not doing it. Now, if it was something that I thought should be coming down, and look at something like Zoom, right? We've talked about how, I think me and Sam Evans have talked about how bearish we are on Zoom, primarily because of the competition coming into the marketplace. Again, I'd be buying puts on this one if I felt that way. Netflix, NFLX. I don't think that Netflix is going to have the big exodus where everyone's running away from Netflix. I would be looking at maybe some other tech companies. I can't really bring myself to short Amazon, right? Now, only reason I went short on Amazon is because of Bezos, and that's done, over, out. That trade's over. Took a loss on that one. Good news is Bezos came down safely, but I had the insurance policy in case he didn't come down safely in that one. What other ones I think might be due for some correction? People are talking about NVIDIA. I think long-term NVIDIA is going to continue to move up, but it's at this point right now where it's due for a correction. And we talked about on yesterday's show where if it gets a close outside of those two parallel lines, there's opportunity here. So, Tom, my favorite is simply buying puts. But that's the way I would prefer to short anything, and just because I have defined risk. I know there's probably other ways you can do it that might be better, might give you a greater rate of return, but that's how I prefer to do it. However other people do it, that's on them. All right, what time we got? Holy cow, we gotta start wrapping up here. All breweries are killing them on Sam. Well, there's a ton of breweries out there too. Shoot, luckily there's 4 down the street, one street right by my house. All right, let me go to a listener question since Jim might be here with us, and he sent this one in last night. He says, I keep getting emails from my broker asking me for permission to borrow my shares. They will pay me interest on these shares. This seems like they just want to short my shares against my long-term account to me. It does not seem like a good idea. What are your thoughts? You are absolutely right. Now, the interesting thing is, I'm curious to know, Jim, what broker you're using, because the way that this works, if you have an Ameritrade account or an E-Trade account or a Schwab account, when you open up your account, you're signing 20, 30 pages and says that you've read it all, right? Just to check participation here today. How many of you have read through every page of your account documentation when you opened any trading account? Have you ever read any of it? I'm expecting to see almost all no's. I'm thinking that Tom Barr might say yes, because I think he's the kind of guy who would read through every little line. But how many of you, type yes or no, have read every line of your account documentation when you open up a new trading account? Pretty sure you're all going to say no. I don't either. I know what's in it, so I don't need to read them. In most of those, I believe the line is written like this. I believe it's called an agency order with subscriber commission added. If I'm not mistaken, that's the terminology they use. And basically what that means is they're allowed to borrow your shares and loan them out. So if I have 1,000 shares of Microsoft sitting there, they could theoretically be loaning that out right now. Yeah, that's what I thought. I thought most people would be saying, nope, I've never read through all that stuff. I mean, come on. It's like when you install the iPhone, it makes you read through 300, finger scrolls of data. You're just trying to find the bottom so you can say, yeah, I read it. I could have said, give me your firstborn child. I'm like, yeah. Let me ask my lawyer. So I'm really surprised that your broker's asking that. Now, to go to your question of, should you do it? Look, bottom line is most people don't even know their shares are being borrowed and lent out to other people who are shorting those. If you respond back to them and say, I don't want you to be shorting my shares, okay, is it really going to help you that much? See, in my mind, I would think I don't want anybody to short my shares. Why? Because I don't want anybody betting it's going to go down. I want people to buy this thing and go long because I'm already long. I don't think it makes that big of a difference. And honestly, if they borrowed your shares, would you even know? I'm so skeptical on financial firms, I'm going to just assume they're taking my shares anyway and lending those things out. So, in this case, Jim, I would contact them and say, okay, how much interest are you going to pay me? If you're going to pay me something, why not make a couple of bucks, right? I would personally let them do it because I think they're doing it anyway. So that's just my 2 cents. What happens if your broker loans out shares and you decide to sell? Great analysis. Okay, so let's all say, for example, that everybody here is a client of brokerage firm XYZ, and you've all deposited 1,000 shares of Microsoft, right? So we've got 50 people watching right now. That's 50,000 shares of Microsoft that I now, as your broker, I'm holding those, right? I have its assets under management for me. Let's say Mike comes to me and he goes, hey, you know what? I'd like to short Microsoft right now. I'll look at my accounts and I'll say, well, I've got 50,000 shares. I can loan out 1,000. That way, I'm not going to have a run on my shares and not be able to deliver to my customers. So I'll loan out to Mike 1,000 shares. I still have 49,000 shares long for my clients. I've just lent out 1,000. So let's say that Ketut, she's like, you know what? I want to sell my Microsoft. So she hits that sell button. I still have those shares. I don't have it for everybody, but I have it for the vast majority. Now, if every person who deposited those 1,000 shares, all 50 of you decide to cancel and sell yours at the exact same time, then I have a problem as your broker. So what I'm going to do is, let's say you've got this big pool, I'm never going to lend out all the shares. It's kind of like fractional reserve banking, right? If I deposit $10,000 in the bank's not going to lend all of that money out. They're going to keep some on hand in case I want my $10,000, snap of the fingers, because they know not all of the clients are going to come and demand their money instantly. Hopefully that makes sense. I'm with you, Drew. I've actually read through a little bit of it, and these statements, then you kind of go, whatever. Interactive Brokers now pays you for allowing them to use your shares. That's great, Andrew. I did not know that. And they should be. Honestly, they should be because they're borrowing from you. For the record, I don't need stuff. I have read many. Oh, I don't read stuff. Yeah, I'm with you, Tom. It's too much, and plus they're putting so much legal speak in there to cover their own ass that they're I don't know. I feel like it's always there to protect them. I had to show this one because I didn't get up in time to make this trade today. A little disappointed. Oops, this one over here. We talked about this on yesterday's show. WEC. I thought it'd be nice just to show you because this. I'm glad that John took it. If you watched yesterday's show, John was asking about a bullish Harami formation that it formed on WEC, and he says thanks for the WEC analysis. Yesterday, I traded the Harami as explained. Great day. Well, if you look here. These last 3 candles, what we were talking about, we had this on the show yesterday. We mapped out the zones, and when we were on the program, it looked like, I'm going to get it right to the candle. It looked like that. Nope, that's not it. Didn't look. That was another Harami. There it is. So close. It looked like that. All right, so you had this little Harami here. We put a line across the top at 92.82, and today you had a great breakout. It opened up below that line and ripped up, so congrats, John. Glad. Hopefully that was a good Friday for you. Put a little exclamation point on your weekend, so good job. Glad that worked out for you. All right, last one for Tom, who's with us today. Tom says VTEX. VTEX is an established e-commerce platform that just went public. The company is a competitor to Shopify with a more international base. How and when do you evaluate a stock like this? Okay, so there's multiple ways to do it, right? Let me bring up VTEX. The chart's not going to look good if it just went public. It's going to have a couple bars of data. Yeah, not the greatest looking chart. You've already seen, Tom's one of these guys that I know he does a lot of research into things. And so he's found this company. It's of interest. You've looked at a lot of probably the fundamentals and what they do, how entrenched they are, market dominance and things like that. So you've already done some good analysis that you can probably say, I'm comfortable buying here or there. For me, when you have an IPO, that's the challenge because your charts look like this. This is all the data we have. I can't effectively make any trades off of a chart that looks like this. Maybe a 5-minute intraday day trade, but I really don't like this price chart. So for me, generally, it's going to be 90 days. I know that might be way too long, Tom, but if I'm looking to do chart analysis, I need to let time roll by a little bit and start to see who's playing, who's establishing those supply and demand zones. What does the price chart even look like, given it's an international company, etc. So if you wanted to buy this thing, you're going purely off the analysis that you've done off the fundamentals and it as a business, right? As far as technical side, I'm waiting 90 days. 90 days because there's also options. Generally, option expiration happens where insiders can now sell after. It depends on how they write it, but sometimes it's 30, 60, or 90 days is when those insiders can now sell their options or sell shares of that IPO. And it's important, if you are thinking about that, look at VTEX and see what the share lockup is for insiders on the sales. So do you think we keep bleeding up or drop on the SPY and triple Qs in August? Man, if I had that crystal ball, I'll tell you, Richard, I don't know. I've gotten caught a few times shorting this market this year. I've actually done well on longs as well. Right now, we are in what's called blue sky territory. Blue sky territory, what is it? Well, let me hide volume from here and I will show you. Blue sky is where you look at your longer term chart. So here's the daily. I'll zoom out. I got nothing in front of me. I look at the weekly, I got nothing in front of me. I look at the monthly, I got nothing in front of me. This is blue sky territory, which means there's nothing on the left-hand side of the chart that's going to impact this in any way. To me, makes it very dangerous, right? Especially for anybody who's trying to pick a top here. Right now, even though I think that this is a fraudulent market, I say fraudulent, yes, because I believe it's manipulated by the Fed. Even though this market keeps on going, it is fueled off of the Fed continual pumping of money. At some point, I don't know when, it will come crashing down. I'm hoping that I have a substantial short position when that happens because it will come crashing down. I mean, look at this price chart of the NASDAQ 100 on a monthly price chart. And I'm going to go back. I'm going to even include the bubble. Let's talk about the dot-com bubble. And let me make this for as long as I can make it. Right now it's on 20 years. I'm going to go 40 years, but it wasn't around back then. Notice the dot-com bubble. You guys see that dot-com bubble on the left-hand side of your chart? Remember that? That was the end of the financial world. It felt like the end of the world. The NASDAQ 100 hit a high on a monthly basis of 120, and over the next 2 years fell all the way down to a low of 20. Well, we've now moved since 2009 from a low of 25 to a high of 367. Now, unfortunately, I can't pull up more data than this because the NASDAQ 100 ETF was started in 1999. But just the sheer percentage move that we've seen since 2009 to where we are today, it's 1,300%. That's an entire market. You see 1,300% type gains, you're talking about an individual stock, right? Oh, Amazon's up 13%. That's fine. But an entire market, especially the trajectory and angle that this thing has, you think the dot-com bubble was big. This is the mother of bubbles. I mean, I hope that I am fully liquid when this thing collapses because, there's people going, there's no way it could go all the way back down to 100. Yeah, it absolutely could. It absolutely could go down to 100. Now, it would take a pretty monstrous feat, but, we've ridden out some great challenges. I have a feeling the Fed's going to overstep themselves, go a little bit too far with regards to mortgage-backed securities and buying all this treasury paper and get caught holding the bag, and all of a sudden could be real ugly when this thing comes crashing back down. Ugly. All right. Oh, I don't think I updated. I didn't update my calendars, guys. Sorry. I was going to update all my earnings calendar and economic calendar announcement stuff. Next week, I'm going to just go into this right now because we're going to have to wrap up here soon. I got stuff I got to take care of. But next week, we actually have some pretty big earnings announcements. To me, it is the mother lode. There are 6 companies reporting that are I'm going to call them FANG stocks. So you've got your Facebook, you've got your Amazon, you've got your Apple, you have both Google, so Google and Google L. That's 5. Oh, wait, that's 4. Yeah, I think it's 5. That's 5. And then you have Facebook. Sorry, Facebook's already part of the FANG stocks. You have Microsoft and Tesla reporting. Now, Tesla is going to be reporting earnings on Monday. That will be your popcorn trade of the week, or one of the popcorn trades for the week. It's going to be a very, very active one. But Tesla reporting earnings on Monday the 26th. That's going to be aftermarket close. You also have Lockheed Martin reporting, and that's pretty much it. But then, the week really starts to snowball. Monday's Tesla, Tuesday's Apple and Microsoft and Google. 3 monsters. Wednesday is Facebook, and that's it. And then Thursday is Amazon. Huge earnings announcements coming out next week. And there's some other major names in that space that I think are all rather noteworthy. No major economic announcements happening on Monday, but we'll see how that one goes. What else do I have? 90 is good. Thoughts on play? Good thought on it. Yeah. Well, it's important to know because they differ from security to security. And it's not just the options. Like if I'm an insider on a company that goes public, and let's say I'm the CEO, like Coinbase CEO, depending on how the IPO is structured and what type of it is, then there's different things they can do. Some can sell right away. If it's the traditional way, there's generally a wait period where those insiders have to wait. And you do see at that 30-day window or 90 or 60 days, whatever the lockup period is, that all of a sudden there is more selling coming into the market. So I wait for those to happen a little bit. Dot-com bubble was based on eyeballs. Profits and revenues were old-fashioned. There was a little more of that profit and revenue stuff. Now, sure, I think that there's also way more expectation that the Fed and central bank is going to keep fueling this forever and ever and ever. And when I look at a chart that looks like this, man, this is just screaming for a major retracement. And I'm not even saying it goes down to 100, but, it's at 3. What if 180? Does 180 seem out of line historically? That'd be a 50% drop. And that brings us all the way back down to these lows that we started in 2020. Could that happen? Yeah. Yep. Absolutely. And I think it probably will, just not right now. All right. Okay. I think that's going to do it for me for today. What time we got? Yeah. I've almost finished this glass of whiskey. This week or next week, I'm going to have Tilly on Wednesday. And then, I don't know. I don't have any other guests scheduled. Again, just tons and tons of stuff. For those of you who are going to be going up to the LA event, I will see you online. I'll be coming in via the camera. Tom, you want anything specific for me to go over with regards to crypto? It's tough because there can be a lot of people that don't know anything about crypto, but I'll be doing a 1-hour presentation tomorrow just for the LA folks on cryptocurrencies. That's going to be joining Todd Davis and Larry Jacobson, which I wish I could be there in person. Sunday, I'm doing a little thing for Sacramento, and then I've got a whole bunch of events internally for Online Trading Academy, which you guys may be a part of coming up, I think, this week. So a lot of stuff going on. It'll be a pretty busy week, but I'm going to do my best to keep the full gamut of shows on for next week. If you have comments, questions, feedback, suggestions, again, thank you all that sent in questions. Obviously, Tom, you're always sending in great content and feedback. I appreciate that. John, good job on the WC. Jim, Kevin, Michelle, if you guys have more comments and questions, keep sending those in. It helps me steer the show and create some topics of discussion. Again, happy Friday, everybody. Cheers. Have a fantastic weekend. I will see you all on Monday. Cheers.